Yeah, we're just plugging away. We continue to plug on with our feasibility studies, and I think they're looking good, and I think they'll come in strong. So that's really good. And as we mentioned, and I think at some point people just got to pay attention. I look at when we're talking about Ascendant, at a 250 million MPV, we've got a 30 million market cap. Like okay, on a PA we can get away with that, right? I mean, on a feasibility, I'm hoping you can't. Like that doesn't make any sense.
With me today is Mark Brennan from Ascendant Resources. Mark is also CEO of Cerrado Gold. The U.S. tickers on those two products are ASDRF and CRDOF. Mark, you've been in the business 30 years. I wanted to see if you could give us maybe just 8 to 10 minutes on Ascendant and why the story, and then we can open it up for some questions today, please.
Yeah, the wonderful thing with Ascendant and is being that coincidentally I was running a company called Sierra Metals between 2007, I guess it was 15 to 17, or at the end of 17, and basically that was a polymetallic mine. We had a Yaracocha mine in Peru, and we had two mines in Mexico, and I actually hired a guy to be my VP of exploration in Mexico, and he was actually the senior geologist for Matsa on the Pyrite Belt. And basically we talked a lot about it, but he was, the use of geophysics is so rewarding on VMS deposits that he actually, when he arrived at Matsa, or at the time, Aguatinitas, which is owned by Trafigura and Mubadala, basically they're producing around 3,500 tons per day of material. And through his geophysical discoveries, he actually took that project up to about 13,500 tons per day. And he became the general manager of the project, which was pretty spectacular for a geologist to become a general manager. But the success, was down to his expansion of the resource. But not only were they very lucrative, did they expand the resource, but Matsa had the most profitable mine on the belt. So I learned a lot through talking with him about it when I was running Sierra Metals. Long story short, when I was approached for this story in mid 2018, I jumped on it, and the reason why is they had already shot significant amounts of geophysics. We had a fairly strong capability at the time, through Andy Campbell, who's one of our directors, and a couple of other guys that he worked closely with for the geophysical side. And we actually interpreted the geophysics, and we saw that, wow, this has the potential to be really big. And this project sits on the very western tip of the Iberian Pyrite Belt. And why it hasn't been exploited before is because it sits under about 130 meters of tertiary material. And so what that means is we're sitting below sand and rock that comes down below about 130 meters. Now, most of these deposits tend to be somewhere in the region of about 800 to 1,500 meters in strike, going to depth. And what we're looking at is that we have gone down now from 150 meters down to about 400 meters with only 40,000 meters of drilling. We came up with 28 million tons of resource. And that is really, that's again, very special. When I was running, again, Yaracocha, if we could add, 2 million tons, spending $5 million, that was a good deal. And Yaracocha had a market cap at the time of about $400 million when for that mine alone. And basically the reality is that, and that was running around 7.5% zinc equivalent. And here we are with about 28 million tons running around, 10% zinc equivalent and or about 1.5% copper equivalent on the south deposit. So the reality here is this has the ability, not only one, to be very lucrative as a development project as it is today, but on the Iberian Pyrite Belt, what we see the ability to build clusters and pods. And so right now we've got a deposit that's got two hold on, I'm just going to pull up my presentation because I think it's important to share.
Sure.
let me just grab this if you give me 1 second, and I have the same issue that I always have. Sorry, just when I try to pick up PDF files, for some reason, it always makes it difficult. Here we go. Okay, so basically, what we have is we have 2 pods that basically comprise of 28 million tons, which I believe are going to become 1 pod, and they're about 1.7 kilometers. So here's our, just to kind of go through the presentation quickly. Here's the kind of the topography, and we're kind of in this area to the foreground of this picture. And what's interesting is that realistically, it looks like we're in the middle of nowhere. We're probably 3 or 4 kilometers from a town of 7,000 people. That town called Grandola is actually quite poor, and they're seeing a lot of emigration because of lack of work. And what we can do is we can bring in a lot of jobs, which will make the area much more prosperous. But what's really interesting here is that we will be able to site this whole project on a landmass where nobody will know that we're there, aside from the fact that we're going to be, you can see the gate, the sign, the gate sign. And likewise, you'll have a few more trucks running on the road, bypassing the town to the highway. So it's going to be a very clean project. The second thing I'll say is that, you look at the geophysics here, and this red, signature here is just screaming VMS deposits, right? And so not only do we have this is about 11 kilometers from top to bottom, but we're focusing only on about 1.5 kilometers up at the tip. And the final thing I'll just point out is that really importantly, we have the very strong local support of the local community and also of the state government, of the federal government. And as a consequence, they awarded us this PIN status. And we're the first mining project mining company in Portugal to be granted this status. And what it is it gives us the ability, the government are saying, we really want you guys to get this project going. We want it to go quickly. We're going to help you accelerate the project as much as we can. And we can't break, we still have to maintain the same rules, the same boundaries, everything that you have within a project, but our licensing process, as opposed to being a year, will be cut to 6 months. And again, how we get that is because the local community really want us to be there. And then the environmental agencies, the Secretary of State, the Commerce Secretary, the Economic Secretary, also see this as a very strong contributor to this region. So that's a really important element just on that one slide alone. If you look at where we are, we're about an hour southeast of Lisbon. So it's very, very easy to get here. You can be there within an hour. Usually, when I've been down there before, I can fly down on a Sunday night. I can be there on a Monday morning, and I can take off. I can go to site. I can spend 5 hours at site, and I can be at the airport to go home that evening. It's a really easy trip. Infrastructure, you can see the port of Setúbal, which is a very important and popular port for a lot of the pyrite coming out of the belt. And then likewise Sines as well. We have all paved highways, really good infrastructure, waterways, etc. Here's the Pyrite Belt, and we're right at the very northwestern tip. And again, the only reason that this project is around is because it sits under about 130 meters of tertiary material. So what are we looking at here, just in a summary? And I'll go through this a lot quicker as we go forward. But we've got a potential for a world-class deposit here. We're in a belt which hosts world-class deposits. And we really see ourselves as a comparative, an analog, let's say, to Aguatinitas or Matsa, which is the most lucrative property on that belt. And the reason for that is when we published our PEA, which I think our feasibility is going to come in very similar to the numbers. We're trying to match that 250 million NPV with an IRR, hopefully closer to 60%. But in reality, what we're looking at is that our NSR, or our royalty per ton, or our revenue per ton, is going to be somewhere in the region of about $90, $95 for the first 3 or 4 years. The cost will be somewhere in the region of about $35. So we're going to generate around 60-70% gross margins, which is very, very healthy. We've got a really strong team down there. João Barros is the president of Ascendant. He's a geologist. He's an engineer. His brother runs the largest drilling company in Portugal, doing work in Spain and Portugal. His father was actually the fellow who sold Lundin Neves Corvo. So he's a professor of mining. So we've got a really strong, capable team within Portugal. And again, this is a great jurisdiction from the perspective that we've got all the local support to drive this project forward. In terms of location, I've run through. We're an hour south of Lisbon, which is great. Geological setting, again, this belt is about 200 kilometers by about 40 kilometers, and we're sitting right at the west end. We're actually staking more land to the north because we see really good geophysics to the north. So we think that this project can get even better. One of the good news, bad news, good news scenarios is that because we're underground, it costs maybe a little bit more, will be a little bit more, but the very positive thing is that one is that the fact that we're underground means that we're getting a lot easier regulatory clearance for permitting, et cetera, than if it was an open pit deposit. Trying to license an open pit deposit in Spain or Portugal these days, I think is going to be very, very difficult. The second thing is that mining of underground mines in Portugal, as I mentioned, we're looking costs here per ton of about $35 per ton. It's pretty cheap. It's a really good rate to be producing. Portugal is a fairly poor country within the EU. Lots of subsidies, lots of benefits that we'll see coming out of the project as we move forward. And again, the resource is really contained within a very, very small area of our 7,200 hectares. Here's the previous feasibility PA that we did at the PA using prices for the PA. Really strong economics, even stronger at today's spot prices. We're going to probably veer between PA prices and Sprott, somewhere in the middle there. We've seen some of the commodity prices increase, but we're going to be a polymetallic producer, which will mean that we're looking at about 35% of our revenue is coming from silver. We've got 15% coming from gold. So about 30% of our revenue is coming from silver and gold. 35% coming from zinc. It's a little higher than I expected. And then what we're also looking at is that we're looking at a good component of lead. What's interesting, copper is only at 12, but as we go deeper, we're finding much more copper. And so we can't get out there and scream the copper story at this point. But I think you're going to see, as we saw at Neves Corvo and other mines on the belt, as we go deeper, we see more erosion, which leads to the copper. I don't think we necessarily want to be a copper mine if we can generate strong margin. I'd rather generate very strong margin than advertise myself as a copper producer. But again, if you look at the operating cost chart on the lower right-hand side, we're one of the lowest cost. We will be one of the lowest cost producers on the belt. And even Aljustrel, this rate that they're using here is frankly from a high grade zone that they're mining currently. And I think that grade conventionally, historically, and moving forward is going to be much, much higher. In terms of the schedule, again, we're targeting to get our feasibility completed at probably the first or second week of May. Environmental impact study, we're going to file early in May. We will receive our approval for the environmental impact study by November, and that'll put us in a position to start construction in the first quarter. And we look at about an 18-month construction process, which will get us into production in the third quarter of 2025. Our expectation there at current prices is we'll generate something in the region of about 125 to 150 million of cash flow per year. And this is on a build that I think will be somewhere in the region of about 160 million. So really good payback and such. Here's just a little bit more information on the Iberian Pyrite Belt. Again, they've been producing on the belt since Roman times. It is the host of the largest concentration of massive sulfide deposits in the world. Lots of mineralization, great infrastructure, great labor force, great ability to bring in supplies and equipment. So everything you need here. And likewise, we're also Lagoa Salgada is very close to the largest reservoir in Portugal. So from that perspective, we have all the ingredients to push a project very, very efficiently. Here's just a little bit of historical kind of information. Looking at where we are today, we drilled about 52,000 meters. That includes about 12,000 meters of feasibility drilling, which includes the upgrading the material from inferred to measured indicated, metallurgical drilling, condemnation drilling. But if you look at where we are there compared to Sandfire, Agua Tenidas was bought by Sandfire just over a year ago, maybe 18 months ago. They paid 1.8 billion for it. So I think that's a good target for us to jump to. But what's interesting here is they started production with about 25 million tons, having drilled 60,000 meters plus. With Neves Corvo, they started production at about 30 million tons, and look at how dramatically they've increased in terms of their resources and reserves. We think that's a very common thing that happens on the pyrite belt. As I mentioned to you before, we're looking at kind of pods or clusters, and basically, we believe that these two will actually become one. They'll look to merge as they go underground. But we're already drilling anomaly D right now. It looks very similar to this northern zone right here. And then we're also drilling anomaly B, which actually looks very similar to a pod that you'd see at Lundin, much more copper driven, but this has the potential to be a game changer in terms of size. This could make us very similar in size to Neves Corvo, which is the largest mine in Europe right now. So we have a lot of very interesting possibilities ahead of us. Everything, as I mentioned, is led by geophysics, whether it's gravity, induced polarization studies, electromag, underground electromag surveys. The reality is that when you see these signatures, that's really the appeal of the Iberian Pyrite Belt. We have probably something in the region of about 8 or 9 satellite deposits that kind of come down this 8-kilometer trend here that we haven't even had the opportunity to really look at. Right now, we're focusing on this little box here called Venda Nova. And if you look at over on the right-hand side, this is where we have the north and south pit, and then anomalies B and anomalies D. I guess it's conventional on the belt that when you discover a deposit, you actually name it. You don't name it before it's discovered. So I find the anomaly B and D a little irritating, but hopefully that'll change in the near term. Again, the proportion, what we expect is the north zone, which accounts for probably about 180 to 200 million of the 250 NPV. We believe that anomaly D is most similar to the north zone. So basically, we're just about completed drilling our first hole here. We think what we did is we went underneath the deposit. We hit schists, we hit massive sulfides, which could only be there as a consequence of there being a massive sulfide nearby. And also with the signature that we saw, for example, below, you can only get that signature with a fairly significant quantum of metal. And so what we're going to do is we're going to go and drill this. We're going to go and build do some underground below, downhole electromag surveys. And that should show us exactly where this deposit is and where the best place to drill our next hole is. Our objective is to drill 4 holes here, 4 holes here, and we believe that will give us the opportunity to announce hopefully 1, if not 2, discoveries. Anomaly B, we're halfway to target depth right now. We're down about 500 meters on a horizontal basis with about a 60-degree angle. So we're probably closer to about down 300 meters. And our target is down another 300 meters before we get to the target area. So hopefully we can announce some positive results from both those areas in the coming weeks.
Mind if I ask a few questions?
Anytime, please don't hesitate.
Okay, so if you can go back to the slide you were just on, please. So looking at anomaly B and D, you wanted to do 4 in each of those. What kind of a cash balance do you have right now, and what do you think you need for 2023 at least in terms of the kind of drilling that you want to do, Mark?
Well, I think the kind of process that we're looking at is this: is that our expectation is that we'll complete the feasibility study, and then we'll probably raise a little bit of money. And frankly, we're talking to strategics, we're talking to others who may want to come in and take a little bit of a bite, and just to get a taste of what we're doing. And I think that would provide a lot of credibility for us.
Sure.
So it's something that we're contemplating. And then from there, I mean, again, if you look at the drill programs that we have, and there's another area that I'll show you in a second where we see a tremendous opportunity to have immediate payback, significant payback, is basically here we're drilling, 4 holes, which will probably cost us somewhere in the region of $1 million. Here, likewise, $1 million. So it's not
Okay.
a lot of money for these holes. I think again, what we would look to do is raise, maybe $3 or $4 million. That would get us to the point of where we have our construction funding in place. And then basically we would raise money at construction. Now, the interesting thing with this project, as compared to say Cerrado, with a polymetallic producer, a base metal project, what's nice is you can often get offtake funding, which you can't get in a gold project. So what I would look at is that on our capital stack, we received a 15 million stream from Sprott on this asset. And basically, again, they've expressed an interest for another $40 million of stream. Whether we want to do that much is another issue. But at the same point, that'll be part of our capital stack. The IRR, I'm guessing, is going to be north of 50% here. So, after tax. So we'll have I think, a very strong project funding as well. The nice thing here is not, unlike in Brazil, we can also add an offtake funding. And I think we can probably get somewhere in the region of 15 to 25 million bucks of offtake funding. So really meaning that our equity component doesn't have to be that significant. As
Sure.
you'll learn from me, John, is that I just don't like diluting. Many management groups, and I'll tell you, I've been a manager before, and I've been an owner now. And the nice thing about being a manager is, you make a lot of money by issuing a lot of shares because you end up getting a lot more options. When you're an owner, you want to kind of hold on to every point you can, with the exception, you want to be a small piece of a big pie than a big piece, a big piece of a small pie. But at the same point, you do want to be careful in terms of dilution, right?
Yeah, of course.
So the point being is that I think if our capital stack is, say 160 million or so, we can probably use 100 million of debt, 40 million of 40, probably 30 million of 20 to 30 million of stream, and maybe 20 million, let's call it, of 20 million of offtake. It doesn't leave a lot of room for a lot of equity, which is good.
Sure. No, we like that tighter capital structure and all the juniors that we own and are tracking. So thank you for that. Can you go back a number of slides, because you just touched on the it's further back. It was about the I think it was that's you can use that slide prior to this one. Sure. So looking at the third bullet point there, where the PEA outlines the post-tax, NPV of 250 roughly and an IRR of 55. What I think is interesting from the what I took away from our lunch last month was that with the feasibility study, you're not going to see a massive drop in the IRR, right? You're looking at maybe around that same 50%-ish kind of number. And also you're not going to see some type of, I know you can't really talk to it because it's not public yet, but you're not anticipating any type of huge change in terms of costs, or are you, versus what you saw in the PEA?
No, I mean, I think CapEx is going to be higher, right? And I think, but on the plus side, you're going to see CapEx is probably higher. We were targeting 130. Again, I think that could be 30 million higher. Approximately, somewhere in that 160 range. But what we're also going to see is also, we've done a great job in terms of demaining, and basically on the demaining side, what it means is that we've actually really gained a great understanding of these deposits where, when we started out in the project, we were kind of treating all these different domains as the same. So here in the top, you've got a Gaussian, which is copper gold rich. In the transition zone, you've got a lead silver rich area, and then below you've got massive sulfide in this blue, and then below that you've got copper stockwork in green, and that comes down to the south and also down to the plunges to the north. But so the important thing that we found is that with this domaining, two things occur. One is we get much greater density of mineralization, which means we're getting higher grade. Two is we're getting on the mining sequence, we're able to minimize or reduce our stripping and dilution. So from that regard, it's gonna, so there's pros and cons everywhere, right? And then on top of that, what's interesting here is the massive sulfide is where again the preponderance of value is. But just like at Matsa, we've got a really interesting large copper stockwork zone, which is very clean. So what can happen here is that the sulfide by nature is dirty, right? Dirty with obviously metals we like, but also metals we don't like. And again, we have less deleterious elements than any of the mines anywhere around us. But what's nice is we have this additional stockwork which other mines don't have, but Matsa has, where you can blend this material. And we're working now on potentially even blending away all the penalties for these nasty metals by using the stockwork. But so I guess the point that I'm making is, we're going to gain a lot. We're going to win on certain areas. We're going to lose on certain areas, right? And so I think the penalties that we're looking at will be substantially below the penalties, for example, that we had in the PA. And when we're reducing those penalties and whatnot, it's because we're having direct discussions with the actual refineries. So basically the smelters. So from that regard, we're actually talking to people about, okay, what would you accept? How would you accept it? On what terms would we get this? On what terms we get that? So we're already kind of working together with these smelters as to what and how we can deliver product and what the best return for us is in terms of what we deliver and to whom we deliver, right? Because they're all different preferences and setups, right? So which actually brings us to another, and this is kind of the north zone. I mentioned this copper stockwork. We found this copper stockwork in what was supposed to be infill drilling, and that's the nice thing about this deposit is we keep finding new areas, as opposed to just going straight down. Which obviously, if you look at Neves Corvo goes down about 1,200 meters, and we're only here at 400 meters below the tertiary material. From the ground, which includes 130 meters of tertiary material. So that was a nice surprise to find this copper stockwork. And that's where I say, I think as we move on and evolve through time, we're going to have a much greater copper component. But this, in a lot of mines, this northern, this kind of Gaussian and transition material has been eroded already, so you don't get it, right? But it's very valuable. So precious metals is very strong there, et cetera. But this other thing that we found, again, just through what was supposed to be infill drilling, is we found this corridor of copper on the footwall, which is now about 600 meters. We think that there's potentially, in this area, and we think we can confirm this with 5 holes. There's about a 600 meter strike here with about 1.3% copper and above. And if that's the case, then we can probably gain somewhere close to 50 million in value on an NPV basis just on this corridor. And this corridor is open at strike; it continues. But what we may do prior to mining is actually bring this into our feasibility. I do an updated feasibility sometime in the fall. We also found up in the northern, a little higher by the hanging wall, we found another copper zone as well. Not as lucrative as this one, but still very interesting. And then we also found evidence of massive sulfides, which is one of the reasons that kind of led us to that anomaly D, excuse me. So what's interesting is we're going to go down. We'll probably go down another 800 meters south of this. But even before we start going at depth, the best thing for us to do would be to start drilling this from inside the mine. When we get underground, but at the same point, even before we have to go any deeper, we can find ways to optimize even the resources, at the level that we're at today. The mine, we've done probably 90% of the work towards a feasibility study. Again, really the metallurgical element has been the most significant, I think, development for us. And basically you'll see probably a press release, I would think, in the next couple of weeks outlining the metallurgical success that we've had. We had always advertised that we would be at least equal to anybody on the belt. And I think what you'll find is that, we're going to be equal, if not a little bit better than our peers on the belt, which is very rewarding. This is what the mine's going to look like. We're going to have a main access ramp in the middle of the two deposits, and one will veer to the south, one will veer to the north. Pretty straightforward, pretty easy for development, fairly clean. We're looking at a 2 million ton per annum, so about 5,500 tons per day. That obviously over time we're hoping to expand. I think it works out to mine life in the region of about 8 or 9 years. We haven't confirmed that yet, but at the same point, we'll be highly profitable as we move forward. It'll be this equivalent of about 130 million pounds of zinc a year, at a cost, I would think, somewhere in the region of about, in the initial years, probably around that 60 cent kind of level. I showed you a number previously on a chart that showed 75, but that was for the life of mine. Again, the metallurgy has probably been one of the most significant elements that we've had to focus on and work on. Any mine on the Iberian Pyrite Belt, any deposit on the Iberian Pyrite Belt, metallurgy is always complex. What we're doing now is only the first stages, and this process will continue for years. We're in the value creation phase. I look at, we've got a great team. We've done this before, as I've mentioned to you, and as you're well aware. We've got a market cap of $30 million. That basically is what, 1/8 of our NPV. Like that's a crazy multiple. There's something very wrong here. And I have to believe that when we bring in the metallurgy, that'll be a big step. And then when we bring in the feasibility, that'll be the second step. We've had a lot of interest from strategics. We really kept them away. And the reason we kept them away is because I'd much rather be talking to these guys when I have an NPV to talk about, as opposed to talking about my market price.
Sure.
Right. If I look at comps on the belts, again, I think we've got a compelling story there. I think that over time, I'm hopeful that we'll be able to prove our value compared to even a Foran or Emerita that have had pretty lofty valuations that I think we can catch up to. That's basically the basic story we have right now.
Thanks, Mark. So could you go back to the slide that you showed probably 5 to 10 slides ago with you at 1.7 kilometers and Sandfire was next to you? There you go.
Yeah.
Yeah. So just to kind of clarify for the listeners, you've got two pods there as you look at your deposit on the left, and then you've got two anomalies that you're drilling this year, and that you think that could expand that to something close, possibly to what Lundin has on the far right.
Yeah, I mean, I think the scale here is kind of funny, right? One is 1.7, 7, and 4. But I think that this north and south zone, that will become, I believe, one pod, right? Like we have here at like the Corvo area, for example.
Right.
And what I think you'll find is that the anomaly D has the characteristics that we think are similar to this northern pod. So, yeah, and importantly, has the economics as being a massive sulfide as opposed to a copper stockwork play, which in line with this. So a substantial expansion in terms of our NPV is possible, up to the tune of a couple $100 million. This deposit here, anomaly B, it's far more opaque, it's deeper, and so it's a much bigger exploration risk, let's call it.
Right.
But at the same point, I think it has the ability to be, the size of a Lombador, for example. It'll push us beyond the size of many mines on the belt and puts us number 2 to Lundin, I would think.
Okay.
In terms of scope.
All right, great, thank you. Nick, would you be kind enough to just unmute everyone to see if anyone has any questions?
No problem. People should be able to unmute themselves now.
Okay, thank you.
Thank you.
Okay, well, what I'll do is if you can go to the final slide that you just were on there, Mark. I just wanted to go over the capital structure for everyone because this is something that, yeah, I liked about the stock when we met last year. I'm just going to add this one person to our group meeting. There we go. So, yeah, fully diluted 167 million shares, very, very competitive. When you look at the major shareholders on the right, it's can you talk to those two entities that own 18 and 12%?
Yeah, I mean, CQS are a very large and successful mining focused group out of London. So they've been shareholders for a long time, and you know what you may recall, I don't know if you recall or not, but we used to have a project in Honduras, which is why they got involved, and it took us a little bit of time to get them over the hill on, as it were, on over the you know, with regard to Lagoa, but now they fully comprehend what we're doing, and love the story. Steve Lasiak, I used to be an investment banker in London. I ran the First Marathon office in London. Steve Lasiak was an analyst at First Marathon in London. He's probably the only Canadian analyst that I know that is, you know, near or a billionaire at the moment. He's made a ton of money. He works out of Ned Goodman's office in Toronto. But you know, really smart guy and you know, very out of the box kind of thinker. But he's been a very strong supporter of ours, and again is very optimistic for our future.
Great, thank you. So it looks like you have 3 analysts covering the stock right now.
Yeah, we're with Cormark, Echelon, and Wainwright. We are starting to see more interest coming into the story, and I think as the feasibility draws near, and again, if you look at us on a competitive, you know, people looking on a comparative basis, it just doesn't seem to make a lot of sense for us to be where we are compared to our peers.
And I would imagine that once your May news is released, that those analysts have been waiting for something like that for quite some time and probably will reassess their targets given what's happening in the market since the financial crisis began March 8th.
I would hope so.
Yeah.
Yeah. I mean, again, I think us trading at a you know, 1/8 of our you know, let's call it 20% of our NPV is just crazy.
I agree. Well, yeah, I'll add in closing here, unless anyone else has any questions, that you met with Don Durrett last week, and Don's written 14 books on gold and silver, one of my peers and a friend, and he actually bought the stock last week at 16 cents US and was so excited about the story he called to thank me.
Well, good.
So
Good.
yeah,
I'm thrilled.
Don actually owns a lot of names in the space and follows 900 companies. So
Wow.
he is quite a force, and he was very, very excited about the story that you and David talked to him about. So thanks for taking the time with him. And I think, you know, with his number of followers and my number of followers, the more people like Don and I get the story out there to the public, they're going to understand what we talked about today a bit better. So I'd like to have you back on, Mark, in May when the news is public, so we can talk a little bit more about what the numbers look like, and also talk about Cerrado Gold a bit, because I know you're very proud of that entity as well, and would love to learn more about that too.
Wonderful. Well, listen, we're always available, and to your point, I mean, things take time to evolve, and we're very confident that as people as the story starts to unfold and as people become more aware of it, they'll really, it'd be very difficult not to see the value proposition.
Agreed.
John,
So
thank you for all your support and for setting up the
Sure.
call, and Mike and Frank, thank you guys for joining us, and you know, we're available for any questions at any time.
Perfect. Thanks, Mark.
Thank you, guys. All the best. Thank you, John.